Welcome to the live stream, ladies and gentlemen. I'm your host, JT, and you're watching Black Box Trading. While the rest of the world is freaking out and calling Bitcoin, saying that Bitcoin and crypto are in a bear market, we're over here spotting the next major move. And we just had a break of a 2-month resistance. We're now retesting a key level of support. And if this level holds and we rally to a new fresh high, I am going to basically call that the bull market is ready to resume. So hit the like button. Don't forget to subscribe. Do all the things. If you're following on Twitter, follow me on Twitter. Let's see who's in the chat here. Let me know where you're joining in from. Hello from Thailand. And yeah, let's just dive straight into it. Let's take a look at the market. All right, so here is the chart in question. This is the Bitcoin daily chart. Let's remove this. We'll get back to that in just a moment. And we have this downward sloping line of resistance. We have broken out of this resistance. We broke out of it on the 9th of December, and we're now coming down and testing this as support. We're getting a little bit of a bounce. The day just started, so a lot can change over the course of the day, but we are seeing a reaction off of this level. Let's turn the volume on. No significant volume signatures as of yet, which is fine. You don't need to see the volume in the market overall right now is very, very low. So you're not going to see the volume start to show up until it's moving up. You're not seeing the support levels test on high volume. You're seeing the carry through on high volume. So looking good. But yeah, so we're sitting here on support. If we turn alphanumerics on, we are quite divergent from the slow moving averages. We've got our fast moving averages down here. We just got a bullish cross and it's coming down to test. We do need to reclaim that level. So I would like to see by the end of the day a reclaim of the 90,500 level. If we can do that, then we're looking good. And then that gives us a really good run up to the up to the 100 simple moving average, a 16% move up from here, and that brings us to the $104,000 level. Once we're back above the $100,000 level, sentiment is going to shift back to bullish. People are going to determine that this was indeed the low here at 80,619. And then you'll start to see people pile back in. So that's kind of what I'm expecting in the short to medium term here for Bitcoin. Now let's turn alphanumerics back off and let's just look for some confluence here. So when we pull a fib, let's just pull a regular old fib retracement, go from the swing low to the local swing high. We can see that from this bounce point and this pivot high, we bounced right off the 0.5. We could get down into the 0.618, but we are respecting that level, the 0.5 kind of golden fib pocket here. We're respecting that level as it stands right now. So 23 hours left in this daily candle. It's going to be very telling. I think if we're back above that key resistance point that we pointed out here on the alphanumerics indicator, if we're back above 90,500, we're looking really good. So that would bring us back above the 0.272 fib retracement level, confirming a bounce off of the 0.5. Let's dive into some smaller time frames here. Now, credit to the let's look at the elephant in the room. Let's entertain the bearish side of things here. What we're looking at in this structure is very distributional. It's a rounding over structure. We have several up thrusts and failures, signs of weaknesses throughout this. So if you are a Wyckoff trader, you're probably looking at this and you're not thinking that this is really showing a whole lot of strength, which that's a very valid assumption. That's a very healthy way to look at the market right now. But I want to kind of remind people what a distribution actually means. And a distribution simply means shares changing hands. And we've seen many, many periods in time around this, distribution of shares. That's where it gets its name, distribution, multiple times in the market that have ended up resolving bullish. Who are you selling your Bitcoin to right now? If you are going and you're pulling Bitcoin out of cold storage, or maybe you're selling it on Coinbase, somebody has to buy it. So who is buying that Bitcoin? Smart money. There's a distribution taking place where dumb money, retail, is distributing their shares, distributing their positions to smart money. So just because you see a distribution doesn't necessarily mean that you're going to go down to lower levels. It just simply means that there is a distribution of shares. There's no longer accumulation. There's no consensus that this is the time to be accumulating the asset, which is very fair, because if you open up Twitter, or you look at YouTube, or you look at any content creator marketing to retail, they're promoting fear. Everything is fear-based. Everything is, we're going lower. Everything is, we got to fill this gap. We got to go down to this level, blah, 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 blah. So it's not surprising to see that dumb money is selling their shares to smart money. And as a result of dumb money selling their shares to smart money, you're seeing distributional characteristics. I wouldn't be surprised to see this kind of resolve to the upside. Now, in our previous show, we talked about our previous recorded video. We talked about this bump and run pattern. Now, the bump and run is when you have this well-established, well-defined downtrend, and then a capitulation into a recovery that breaks above it. So we're in that recovery phase. Let's take a look at some distributions that we've seen in the past, and look at kind of the smaller time frames to determine, did they look accumulative or did they look distributional? So here's another one. Look at this. It looked very distributional. When you go down to the smaller time frames, the recovery prior to that, oops, no, that's what we're looking at today. Let's go back here. Where is it? Not much of an accumulation structure right here. A lot of people would have interpreted this as bearish. If we pull up the RSI, you had bearish divergences. You had several up thrusts along the way. You had a rounding over, right? You have lots of rounding over characteristics, up thrusts. Everything looks like it's going to head down lower, and then boom, off to the races. So don't be surprised. Don't be taken off guard if all of a sudden you're looking at a bearish structure and it resolves to the upside. This is very normal. Why is this glitching out? That's not normal. Why is it doing that? Let's give it a quick refresh. Reload without saving. All right. Same thing here. Like, look at this distribution. You had several, a structure, an up thrust, a curling over, sign of weakness. You're looking at a lot of distributional characteristics, tons of distribution. Why? Because distribution was taking place. That's the thing. The market is afraid. Retail is a bunch of paper-handed little bitches. They're pussies. They think the market's over. They don't realize that the strongest cohort in the global markets is accumulating, and they're not accumulating for fun. Okay. They're accumulating because this thing is going to go to massively higher levels than where we are right now. If you thought 124 was the top, you're just playing, it's child's play. You don't get the game that's being played here. Wall Street is going to squeeze this for every little bit that it's worth, and they're targeting $1 million. At least $500,000. And then look, all of this distributional characteristics, then boom, move up. Don't be afraid of a distributional type of price action, because all it means is people are selling. But what's important is who is selling. If smart money is selling, if everybody's bullish, if the whole market's bullish and you're seeing a distribution because smart money is selling, you're in trouble. You're in real trouble, because a bear market is about to occur. If the whole market is bearish and you're seeing distribution and smart money is buying, you're a fool, because smart money is not buying. Smart money is not in the business of losing money. Smart money is in the business of manipulating the markets at the cost of its retail investors. Retail, it always loses. 95% of traders lose money. Why? Because they're fucking dumb. They don't understand the signals. They don't understand the way that markets move. And they have no conviction, and they're not patient. These are all the characteristics of the retail investor. So, be aware of the emotional side of trading. Wall Street is a professional. Their whole world revolves around shaking retail out. They're shaking people out. Mission accomplished. Mission accomplished. They are packing their bags because this thing's going to much higher levels. Anyways, let's take a look at MSTR. How's MSTR doing? So, as we called it in that video, we discussed on the MicroStrategy video that we put out, I think, at the actual Pico low, we said the low is in. So far, that's holding true. We have a bullish divergence forming here, quite exaggerated bullish divergence showing up here on the RSI. Demand overall is still really low for MSTR, which is not surprising. MSTR is going to react when Bitcoin reacts, but you got a good amount of volume coming in at this low. If you just zoom out here, let's actually go to the daily and get a better picture of the volume. You can see through this kind of distributional phase, volume was relatively low. You had a high volume area here at the blow off top, a lot of over exuberant sentiment back there, and then relatively low volume, pretty much drying up until here. People are interested again. Smart money is back in. You have a lot of buying activity happening. You know that it's buying activity, by the way, because price is not falling and the volume's high. If we were in a downtrend, look at how aggressively price fell here on low volume. So it takes no volume for the price to go down. And then all of a sudden it stopped falling. It stopped falling and the volume picked up. What does that logically tell you? If there's extra market force, which is how volume should be looked at, if there's extra market force coming in, and the result of that market force is a stopping action where it no longer falls anymore, that market force is easily determined to be demand. So demand's coming back in for MSTR. I am not a stock market guy, but if I was, I would be buying MSTR here. Not financial advice. Nothing here is considered financial advice. I'm not a financial advisor. But, if you're looking for what I perceive to be the trades, this is a no-brainer. MSTR is a buy. It is a buy. Let's take a look at the total market cap. Feel free to spam your tickers, anything you want me to take a look at, ladies and gentlemen. We got 15 people watching the live stream right now. Anything that you want me to take a look at, we will. Still quite a lot of work to do here on the total cryptocurrency market cap, not surprising, but we are holding a support level. Things to watch out for. If we lose this level, let's call it right here, which we're sit right up against. If we lose this level, it's not going to be good. We are currently on a very small, you can barely see it. I mean, it's not really noteworthy. Let's not even zoom in. It's looking like it could totally fall out. If we fall out of that, it's not going to look good for the cryptocurrency market. So do keep an eye on this chart. It will be very telling, and it will give us an answer over the next week, maybe two. Let's take a look at some of the other bigger ones. XPL Plasma. Interesting. Let's take a look at that. What do I got here? Yeah, XPL. Let's go to CoinGecko. Plasma. Market cap 300 million. It's on the Binance scam chain. What would invalidate your bullish outlook? Nothing. Not much. Not much at this point. It's a sentiment play for me. You're never going to see the end of the bull market when everybody agrees it's the end of a bull market. It's never happened in the history of markets, period. I'm not just talking crypto. When everybody agrees that the market is over, you're at a bottom. Redefining how money moves. High performance layer 1 blockchain purpose built for stablecoins. That's a very good narrative. Very good narrative. Stablecoins are everything as far as TradFi is concerned. They don't really care about Bitcoin. But if we can reformulate the Forex market, that's the way to go. So, okay, looks good. Looks good. Let's take a look at the chart. XPL. Ooh. Ooh. Well, the insiders got rich, and that's all that matters, right? That's all that matters. So with something like this, keep it simple. First of all, this isn't a really surprising chart at all. You're talking about a very degenerate gambling play. It's very, very high risk in a market that doesn't even give a shit about the top cryptocurrency. So to take a position in something so low market cap against the grain, you just got to be really careful. Thanks for the vids. Keep it coming. Yeah, Zulu, and I'll expand upon my stance in just a moment. But basically what you're looking for on this is a break above. Which it looks like it could do soon. Give it a lot of grace, I would say. Something like that. Now, if it crosses this and it just does like a low volume nothing and then trades back down to flat, then you really, you're going to be waiting again because you'll create another trend line that it needs to break. But I don't expect anything from this asset for a long time, personally. It's just too far down the pecking order for retail to give a shit. Like I said, at the very top of the show, retail is selling. Retail is selling Bitcoin. They are selling out of their positions. So they're not selling out of their positions to buy microcap altcoins. They're selling out of their positions to chase the AI hype or just hold cash because they're worried about a recession, whatever the case may be. So yeah, it's not much to write home about here. Now, going back to Zulu, is there anything to invalidate? Now, yes, I would say an invalidation would be another breakdown if we took out the low. But the thing is, at that point, we're already like so low that you're just going to ride it out. The thing is, a bear market is determined by how over exuberant the top is. Now, let me kind of walk that back a little bit and kind of go through that on log scale. So let's go to monthly. The higher and more exciting the rally, And the more ferocious the blow off top, the deeper the bear market. So this was a $60,000 move, or a 60,000% move up that resulted in an 81% move down, right? Massive, ridiculous euphoria gains that basically gives everything back 80%. Then we had the 2017 bull market. That went up 12,000%. And then it retraced 84. I think I pulled this wrong. I think I pulled this one wrong. To the tip there, 86. So massive overexuberance down to 84. Then we had this run, which was the 2020-2021 run, and it went up 1,000% and came down 74. This compared to the 2017 run, it was noticeable. We for those who were around in the 2017 run, you know how crazy that run was, and it's not surprising that we got an 85% correction. Then this run, the 2020-2021 run, that was a great run, fantastic run, but it was noticeably less than the cycle prior, and as a result, a 74% correction. So this run, which I just do not believe that, institutions get in at the, I just don't think at all that institutions are coming in for the shittiest bull run. They're coming in for the biggest one that they control. It ran up 600%. It's peanuts. So let's say, at worst, at the absolute worst, it does a 60% retracement. That would be a bear market in Bitcoin. And that brings us to 46. So even if you do need to endure a bear market, it's not going to retrace 80% for multitude of reasons. I'm just playing devil's advocate here because it's ridiculous to assume that the largest institutions in Wall Street are getting in now to just in time for an 80% correction. And then it's not going to go on for 2 years. So it's going to be shorter and it's going to be less deep. I actually think that 2025 at this point was a bear market. 2025 was a bear market. We didn't do anything. So we've already had a bear market time-wise, and we've had a 35% correction. I think that we're setting up for continuation. So what do I think as far as invalidation? I think that the invalidation point just gets me out. Rather keeps me in. Like the invalidation point, if we lose 80, we're going to be so close to a bear market bottom. I'm more focused on buying than I am on selling. The best things that you can do in the market is focus on the buys. Our bear market buy in the private group was 18K. We're at 89K. Not worried. Now, many people, because that's how every top is, most people buy at the tops. Many people bought 100 to 126. And that's it. 120 to 126. So they're freaking out. But it's their first Bitcoin bear market. So, you got to earn your stripes, so to speak. If we break down from here, I will just be surprised, but I won't be taking any action. Still massively, massively up. BTC is king. What about funding rates? I tend to use negative funding rates on perps as a good indicator to go long, which they have been for most of the last few weeks. I think that if that strategy is working for you, go for it. And I understand the thought process, and it's a very good one. But I wouldn't use it as a standalone strategy for going long. For going long, you just... Oh, man, I missed this trade. Darn, I was waiting around for this one, too. Went out for coffee, missed the entry. Dang. Oh, well. There will be another one. Actually, let's set this up. You just look for... So this is exactly what I'm looking for here. is a break. So let's pull this fib, and you're looking for a break on a small time frame structure, which we got. Now, you got to create a bias first. So you look at the daily structure. This is on the 15. So go to a 4 hour. What do you think is going to happen, right? So we just broke this multi-month downtrend and we're testing it. So the assumption is if we're on a test, we're looking for a reversal, right? If we're testing that range and it's bullish, we have a bullish setup that is waiting for us. So then you go down to a smaller time frame like the 15 and you look at the test and there's the break. I'm so pissed off I missed this. Honestly, I'm actually quite upset that I missed this as a result of going for coffee and doing a live stream. Sorry guys, it's not your fault, it's mine. But yeah, it's breaking out here with a trend. One simple line. Everybody, a lot of people really overcomplicate things and they're like, oh, we got a falling wedge or we've got a distributional this or a rising broadening wedge or this pennant, that pennant. No, just draw one fucking line. If you're looking for a long, draw a line on the resistance. One line on the resistance. If you're looking for a short, draw one line on the support. One line. That's it. That's all you need. And when it breaks that, get in. Buckle up. Exactly like it did right here on this trade that I missed. I'm so pissed. So pissed. Did I get in? No, I didn't. I think I have resting orders just waiting. I didn't get in. No. Fuck. Oh well. So yeah, like don't look at funding rates or like order book flow or any of this complicated stuff. When it breaks on a small time frame, like you've got your bias on the 4 hour, right? Your macro idea, where do we think we're going that day? Then you have your finer details, like where is the trend, where is the support, where is the resistance, where do I place that one line on the 15? And then you have your price action on a really small time frame that freaks people out, like a 1 minute or a 3 minute. But if you're going to make an entry on a trend line break, you want to be in on the first minute. You don't want to wait around. So as soon as you get that break and you see that break on volume, you get in. I think we have a chance on this, actually. I think we have a chance to get an entry. Now, let's say you missed it, which we did. Here's a fun little impromptu lesson. Here is an impromptu lesson. Never chase. You guys already know. Never chase. Never chase a trade. So how do you buy if you're not going to chase? Well, you look for confluence zones. Now, what is the area of interest here? Well, it's the breakout. And where can we find maybe a fair value gap? Well, there's a fair value gap here. Now, what is a fair value gap? It's where price really accelerates without testing prior structure. So here we have a fair value gap. You can go from this wick to say, this one's quite wide actually, from this wick, and you've got a gap here. There's a bunch of orders sitting here where they didn't get filled because somebody saw a break above, right? They watched price break above, so they logically placed their orders down at the wick, the prior wick, waiting for the market to come back to them. The market doesn't come back, so their order just sits and it's resting. So you have a bunch of orders in this area. This is your fair value gap. It's an unfilled area of a candle. So you look for confluence there. Now this, on a fib retracement, you got to wait for it to stop rallying, which it keeps rallying for now. Let's say it rallies. Well, just for examples, just for conversation's sake, say that it rallies up to the point at which the fair value gap is now in the golden pocket of the 618, between the 0.5 and the 618. Now it's in the golden pocket. Well, now you place your order in the value gap and you wait for the market to come to you. And then you're able to participate in the breakout of the structure that you saw, even though you missed the initial move. So just have a plan. Now, if we reverse here, if we reverse here, my golden pocket is going to be kind of down here at the breakout level, but I've also got confluence of the long-term moving average. This is that yellow line. This is the 100. There's a 100 and a 200. The 200 is the rev wave on alphanumerics, and I've got this larger. I changed my settings on alphanumerics, by the way. You don't have to use my settings. The stock settings work just the same. But mine is set at 100, and I've got confluence here at the 0.5 fib retracement and the 100. We got to move this up because we keep on rallying. God, I'm pissed off. I missed this move. But yeah, so you look for a fair value gap. You look for a move back down, and that's how I would make a long entry. I also use alphanumerics, etc. It's just added confirmation. Yeah, no, that's a good. Yeah, you never. It's not a standalone way of trading using the funding rates, but it usually tells you what the market's thinking, and knowing what the market is thinking is a good way to approach the market in general. Whatever the market is thinking is probably wrong. That's what you want to counter, because most traders lose money. So if funding rate is negative and everybody's short, we got a lot of stops to hit. What is the market maker going to do? We have a lot of stops to hit. So the market maker is going to do what the market maker is going to do. All right, got sidetracked there with a little trading lesson. Let's take a look at the altcoin rotation and see how that is shaping up. Bitcoin dominance continuing to round over in slow motion. This thing is moving in slow motion. Mind you, we're looking at weekly charts. We could go to a 3-day, I suppose. But yeah, we are just moving in slow motion here. But we're moving in slow motion in the right direction. Once we take out this low, well, you guys know if you've been watching, 30x on the altcoin portfolio on average is what I'm expecting. Let's take a look at Sonic, see how Sonic's doing. Abysmal. Let's not look at Sonic. Caspa, horrendous. We told you to get out at Caspa at 12 cents. It's at 4 now. H-bar, also horrendous. Man, alts are just fucking slaughtered. Sorry, pardon my French. I don't mean to use such aggressive profanity. Apologies to those who are offended by that. I got to work on it. Always be improving. Solana sitting on a key support level, but it looks weak. You don't like to be sitting on weakness at a key support. It could totally bounce. And if Bitcoin bounces, it will bounce. But man, is that a ugly, precarious chart. Very ugly. Very, very ugly. Let's see what the VPVR says for the point of control. Yeah, we're sitting right underneath the point of control. No bueno. No bueno. Getting a bearish rejection from the point of control. That's never what you want to see. Hopes and prayers go out to Solana. We got to hold it. We got to hold it together. We are on a 3-day chart, so I'm sure the smaller time frames look a little bit different. How do things look on the 4-hour? 4-hour, it's kind of the same. It's kind of the same. How's XRP doing? Also sitting on that precarious support range. Also getting rejected from the point of control. Oof. Yeah, the alts look They look ready to crash. Alts look ready to crash. Now, again, I'm not saying alts are about to crash. There's a big difference between me saying alts look ready to crash and alts are about to crash. Let me explain. Going back to Bitcoin, looking at the distribution, we said just because distribution is taking place does not mean we are going to fall. All it means is distribution is taking place. What is distribution? We went through this already. Distribution is shares changing ownership. So this looks distributional. Doesn't mean it's going to go down. It just means it looks weak. There's a lot of selling going on. What you need to see for XRP is a break of this trend line. Break of that trend line, we're back in business. Until that happens, we got nothing. Let's set an alarm on this one. Once per bar close on the day. Yeah, I don't want to be bothered unless it's a daily close. Let's take a look at Chainlink real quick. Same story, different chart. Except Chainlink's got quite a few bottoms here. Quite a few bottoms. Yeah, there's no point looking at altcoins right now. It's all about Bitcoin. It's all about Bitcoin. Until Bitcoin really starts to behave, you got nothing to work with on the altcoin side. All right. Well, the chat is unsurprisingly quiet, so I guess we'll close things out early here. Just to recap, we know what we're looking for on Bitcoin. We got this bullish retest that we're thinking is going to hold. I'm calling for higher levels. I'm calling that the low is in, and I'm calling for this bump and run to resolve to the upside and take out new highs. If we take out 95,000, we're off to the races. This thing's going to plus 100K in a matter of days. Take out 95, you'll be at 100K in no time. Alt rotation is taking place, but it is going so at a snail's pace. Don't expect altcoins to perform realistically till mid to late Q1 next year, if I'm being realistic. I know that's not what people want to hear because retail is really impatient, but you know, good things come to those that wait. And then MSTR, lows in. We're calling it. We're calling the low is in on Bitcoin. We're calling the low is in on MSTR. So that is all the time I have for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. Don't forget to check out the free Discord. Scan the QR code popping up on the screen right now, this little guy right here, and we'll get you in. Get in while it's free. You know, we're in a bear market. We got to offer a lot of value at a very discounted price. Doesn't get any cheaper than free. So get in while it's free, because as soon as we're back at 100K, that's the end of that. It's time to go back to bull market structure. So if you guys enjoyed, leave it a like. Until next time, please trade safe. We will see you guys at